Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss with you investing in stocks versus crypto. And the reason that I'm talking about this is I've had a bunch of people over the last year or so express almost disdain for stocks, in part due to, I think, what they've perceived as, really great returns in crypto, and, saying, hey, listen, kind of this idea of stocks are passé. Now, there's a funny story I'll tell you in a minute about this that, should probably be, a little bit of an indicator, something to consider. But anyway, I figured it was worth diving in and discussing. And so, curious to hear from you. What do you think? Are you more interested in or attracted to investing in stocks or crypto? Why or why not? Put it in the comments below. Let me know. And I'll share with you kind of my thoughts as well as about where we are today. And hopefully that helps you with kind of making some future decisions. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. Thank you for support. If you'd like help with international tax optimization, paying the lowest legal amount of tax possible, forming companies, opening bank accounts, getting residencies and citizenships around the world, relocating, etc., please reach out to us. You can book a call, calendly.com/Michael-Rosmer. There's a link in the description below. Or you can send a message to our websites, offshorecitizen.net and offshorecapitalist.com. All right, so very briefly, there's sort of a narrative that has been going around, which is that, there's these huge returns in crypto and there's not in stocks. And I think this is, maybe a little bit a function of particular assets and a particular bull market. Certainly crypto is a less mature market. And so definitely, you see some crazy, 200x type returns that have happened in crypto since, say 2020. However, by and large, that's not the norm. And, there are actually some really good returns you can get in, say, penny stocks, etc., in, the stock market. I generally wouldn't advise those, but that being said, they have been there. If you're shooting for kind of like moonshots, okay, maybe there's some options there that you can get in crypto that are harder to find in stocks. But on the other hand, on a risk-weighted basis, I'm really not persuaded that crypto is intrinsically better than stocks. And I'll talk about that in a second. But to give a little bit of context, as of today, Bitcoin is at about $41,000. If you were to compare to a year ago, it's only up like a few percent. It was at around 39,000, something like that, coming into 2021, and now we're coming into 2022. And you can kind of get a context on where we're at. By contrast, Apple's stock is up like something like close to 50%, not quite. Google way up, Nvidia way up, Microsoft way up, the S&P 500 way up, NASDAQ way up, etc. So you actually were better off not holding Bitcoin during 2021. Which is kind of interesting. I famously kind of sold, and I believe I did some videos on it, talking about how I sold my Bitcoin in January 2021 and moved into various different altcoins, which I've kind of varied throughout the year. And yeah, definitely there were better returns in certain alts, but not all of them, right? Some of them underperformed Bitcoin. And so, where you were could have depended pretty dramatically on what you invested in. And so I think it's a mistake to believe that returns are better in crypto and worse in stocks. This is especially true if you look at it on kind of a risk-weighted basis, right? So while, a crypto token, could maybe go up further, it could also go down further. And in a bull market, I think it makes sense to risk on. But on the other hand, it's not always clear when we're in or not in a bull market. I have a client who did really, really extraordinarily well, and he was commenting on this, that he made really, really good gains in the first 3-4 months of the year, probably, but then backed off a little bit because it was less clear where the market's at. Right now, I would argue it's less clear. So I went into a bunch of crypto investing in 2020, early 2021, and was obviously a fairly big advocate on that. And that was a function of where the market was at the time. The opportunities are not always the same. Let's contrast to stocks. So there's a lot of stocks right now, good tech companies that are down, 30 to 70% from their all-time highs. You can look at something like Beyond Meat is down to around the price that it was when we entered the market at kind of lows in March 2020. You have something like Ubisoft, which is looking at, pushing on 5-year lows. You can look at something like Alibaba that is down, around 60 some percent, et cetera, et cetera. Now, some of these might have risks, they might have reasons for that, et cetera. But the whole point is that it's certainly not true to suggest that stocks are up and in high risk across the board. A bunch of them have pulled back. Now, they might still be overpriced, it depends, right? But a lot of them have pulled back considerably from their all-time highs. And so that's something to consider on a risk to reward basis. And certainly you have something more to judge when it comes to stocks. And so just really quickly, some of the differences between investing in stocks and crypto. Crypto is a 24/7 market, it's open access, it's permissionless, etc. I like that a lot about crypto. And so for me, ideologically, I enjoy what it is that crypto stands for in the world. And I do think it's something that's very valuable. I think permissionless networks, I think censorship resistance, I think open, decentralized, etc. is critical and probably one of the only ways of solving certain key challenges that we have as a society. And so I want to support that insofar as this is the case. Now, it's equally true that a ton of crypto projects don't fit that criteria. A lot of them are centralized, a lot of the infrastructure is centralized, a lot of the projects are just complete garbage, there's nothing there, a whole bunch of them are scams, a bunch of them there's no token utility, etc. And so you can, if you're not doing something smart, even if you buy for the long term, you can easily get taken out in crypto. It's often just a popularity contest. Versus if you're buying in the stock market, okay, you have limited stock trading hours, that's annoying. It certainly is a permissioned system that excludes all sorts of different participants. But on the other hand, you have a legal protection for yourself as well. When I buy a stock, I'm in a position where I'm getting a piece of the company. And I know that as a shareholder, that entitles me to a certain percentage of the assets, certain percentage of the income. And this allows me to do some fundamental analysis that is quite different than the fundamental analysis I would do on crypto, a lot of which has no fundamentals, right? Not to say that you should generalize that. It's very erroneous to say that there's no fundamentals behind crypto. It depends on the crypto. Some, there's a utility demand, etc. Some tokens actually might have some sort of yield associated with them, etc. But that's definitely not even close to the truth for all of them. In fact, not even for the majority of them, I would say. Obviously, you can have companies that can go bankrupt, they can lose value. This is an advantage of crypto. Your token, even if it goes down, even if the project kind of dies out, etc., you get all these graveyard tokens, but you actually may still be able to sell it, and somebody can pump it just based on hype, etc. So it's a weird space when you can't have tokens wiped out of existence, whereas you can with stocks. Okay. Long term, definitely, I think there is some merit to the idea that there's opportunities in crypto and that probably most things will get tokenized. The idea of tokenization has a lot of inherent efficiencies to it, but that should not lead you to believe that stocks or investing in companies is a bad thing. In fact, often I would prefer to invest in a company as a way of getting out there because of the fact that I have some sort of connection to what it's actually doing, right? A company can put out a token and it has no connection to the company whatsoever, and the company can do really well and the token can do really poorly. What I like about the tokens is that there's pretty much immediate liquidity, and so depending on how things are going, I have much more flexibility to get in and out. Whereas if I'm not in a publicly traded company, I don't have that. But if I have a publicly traded company, there's something there. In addition to this, I do think there's something to be said for splitting up your wealth, especially if you have enough, right? So if you're in a situation where you have relatively little wealth, all right, maybe you go for the highest upside and make that work for you. But let me give a context. We help people every month with getting citizenship by investments in a variety of different programs. And one of the things that we often do is we help people to do this by paying with cryptocurrency. So I mentioned in previous videos, etc., that we can facilitate buying any of the Caribbean programs, Vanuatu, some of the others, with crypto. Okay, great. However, while you can make the payment in crypto, some of them, for example, St. Kitts, will not accept the source of wealth as being solely in crypto. So when I have, assets that are in, Apple stock, Nvidia, Matterport, Teladoc, whatever, right? Some sort of different publicly traded company. And I show that as my asset base and I sell it and that becomes my source of funds. Banks, the whole world of financial institutions like this a lot. This is something that they can easily verify, they easily understand, and they're willing to accept. This is not necessarily the case for crypto. It depends, it might be, but not necessarily, okay? And so I do think that there's something to be said for splitting yourself up. Most importantly, as much as I might see opportunities in the space from a business standpoint, as much as I might ideologically like certain things behind a movement, the reality is that from an investment standpoint, we should never be attached to an asset class. It is erroneous, it is crazy to say, crypto is better than real estate. Crypto is not better than real estate. Real estate is not better than crypto either. It's what are you buying? When are you buying it? What are you paying for it? What are your investment objectives? What are your time horizons, et cetera, et cetera, et cetera. Okay? There isn't an asset class is not intrinsically better. There's a lot of honeypots out there in crypto, which is just pure loss. There's a bunch of properties out there that are in shambles. There's also a bunch of great buys in real estate. There's a bunch of great buys in crypto. There's a bunch of ways that, each of these has their own characteristics. And so something is not better or worse. It's, in my opinion, the worst mistake that I see kind of amateur investors make is you'll go into some sort of Facebook group or something and say, hey, what should I invest in? And people will be like, oh, invest in crypto, invest in real estate, invest in this. The reality is, I know people who have made tens of millions of dollars in real estate. I know people who have made tens of millions of dollars in crypto, tens of millions of dollars in stocks, on and on and on. And equally, people have lost in each of these things. It is not the asset class. It's understanding how to utilize the asset class. Now, at this stage in time, I think that you're going to find that crypto is probably not going to perform nearly as well in 2022 as it did in 2021. Might be wrong, but generally that's likely to be the case. By contrast, if you have solid companies whose stock price is pulled back 30, 50, 60, 70%, you can at least see that what you're getting from a profits standpoint. And so you can have some idea of dollar cost averaging in what it is that you're getting for your money and how that should play out over time. Much more difficult to do this with crypto. Not impossible. You definitely can dive into the token utility and the tokenomics and understanding the smart contracts and things like this. But very few people do that. Most people really end up going in and paying attention to really just the hype or the project itself. And you can have a great project with a poor token. I've been interviewing project founders over the last, 6 months or something like that. And it's one of the things that I notice. I'll often interview people where they're brilliant, the project is brilliant, and the token is done very poorly. So I think that's a really important distinction to understand. And understanding how to do that due diligence is very different. I personally don't think you should rule out any asset class. I think you should get into a situation where you expand your circle of competence to have more tools. Basically, look at every asset class as a tool that you can use depending on the market conditions. And then your job is to read the market conditions and apply the best tool for the best task. So anyway, that hopefully is helpful for you. Don't rule out either one. There's good opportunities out there if you're willing to spend the time understanding it. And I'm going to look forward to seeing you on the next video.